Today, we are delighted to have with us Sandy Call, Executive Vice President and Head of Innovation for Franklin Templeton, who owns some of these blockchains, and would Franklin potentially or somebody else have their own blockchain sometime in the future?
Yeah. So the original blockchains, right? So Ethereum and Solana, all these blockchains that I had mentioned previously, Bitcoin as well, right? They were owned by foundations, right? They are not companies. They are set up by foundations. And basically, everyone who owns those tokens is an owner of the blockchain. So if I buy Ethereum and I have Ethereum in my wallet, I am a partial owner of the Ethereum blockchain. Right. So it's a different structure than a company, right? I can buy shares in a company, but the assets are still the company's assets. When I buy tokens of a blockchain, I actually own part of the network, right? So it's a way of owning a network, right? If you think of stocks as a way of owning a company, cryptocurrencies are a way of owning a network. And so everyone, who owns cryptocurrencies owns part of the network of that cryptocurrency.
A top executive at one of the world's largest asset managers, managing over $1.7 trillion, just explained exactly why this is true. Her name is Sandy Cole. She's Executive Vice President and Head of Innovation at Franklin Templeton. And the clip that's blowing up right now? It's not random hype. It's institutional validation that XRP holders have been waiting years to hear. Stay with me, because I'm breaking down exactly what she said, why it matters more for XRP than any other token right now, and what this could mean for price, adoption, and your portfolio. If you hold XRP, or you're thinking about it, this might be one of the most important things you hear this month. Let's dive in. Franklin Templeton isn't some small crypto startup. They're a 90-year-old Wall Street giant with trillions in assets under management. And Sandy Call leads their entire innovation and digital asset strategy. She helped launch Benji, one of the first SEC-approved tokenized money market funds, running 24/7 on public blockchains. They've tokenized ETFs, partnered with major crypto platforms, and built a full institutional digital assets division. So when someone like her talks about who actually owns blockchains, the entire industry pays attention. Now here's what she explained. She said that blockchains like Bitcoin, Ethereum, and others are not owned by companies. They are owned by the people who hold the tokens. Think about that. When you buy shares in a company, you own a piece of that company, but you don't own the entire system it runs on. But with blockchain, it's different. When you hold the native token, you actually own part of the network itself, the infrastructure, the value layer, the system that moves money and data. As she put it, cryptocurrencies are a way of owning a network. This is what people call the ownership economy. Your wallet isn't just storage. It's your bank, your broker, and your ownership certificate all in one. Now let's talk about why this matters specifically for XRP. The XRP ledger, also known as XRPL, is a decentralized public blockchain. It's not controlled by a single company. It runs on a global network of independent validators. And XRP is the native asset powering that network. It handles transaction fees. It provides liquidity. It enables value to move across the world in seconds. So when you hold XRP in your wallet, you're not just holding a token. You are participating in the network. You are aligned with its growth. You are, in a very real sense, a partial owner of that system. And this is exactly why this message is so powerful. Because for years, XRP has been misunderstood. Many people thought it was just tied to one company. But this framing changes everything. It positions XRP as a decentralized network asset, just like Ethereum. Now let's break down what this could mean. First, the narrative shift is massive. When institutions start describing XRP this way, it changes how regulators, investors, and the public see it. Second, we are entering a tokenization era. Major firms like Franklin Templeton are building systems where real-world assets, like funds and securities, live on blockchains. And networks like XRPL are designed for speed, low cost, and real-world use. If institutions start using XRPL for tokenization, XRP holders benefit directly. Third, this creates alignment. If you own the network, you're naturally incentivized to see it grow. That's how strong ecosystems are built. Fourth, this could impact demand. As more institutional products emerge and more real-world use cases develop, demand for XRP could become more sustained, not just speculative. But we also need to stay balanced. XRPL governance is validator-driven, not direct token voting. There are still large holders in the ecosystem, and the broader crypto market still moves in cycles. Nothing goes straight up. But here's the key takeaway. When a trillion-dollar asset manager starts framing crypto this way, it's not noise, it's a signal. And historically, signals like this come before major shifts. Now zooming out, Franklin Templeton isn't just talking, they're actively building in this space. Tokenized funds, on-chain financial products, a full digital asset division. They believe the future is wallet-based, a world where your assets live on-chain. And if that future plays out, networks like XRPL are positioned right at the center of it. So what does this mean for you? If you hold XRP, you're not just speculating on price. You are participating in a decentralized global network that institutions are starting to take seriously. This isn't just hype. It's a shift in how ownership works in the digital age. Now, I want to hear from you. Do you see XRP differently after this? Do you think this changes the narrative? Drop your thoughts in the comments. And if you want more deep breakdowns like this on institutional moves, crypto trends, and where the market is heading, make sure you subscribe. Until next time, stay informed, stay sharp, and remember, your wallet is more powerful than you think.